Hello, you're watching Deal Flow, the CNBC Africa show that gives you perspective on Africa's deal makers. I'm Erica van der Merwe. Brian Joffe and his team at Bidvest are considered amongst the shrewdest deal makers in Southern Africa. With the deals by the diversified industrial group getting bigger and perhaps more daring over the years, we look at the M&A track record and future prospects for Bidvest. For that, we've lined up Graeme Korner, director at Korner Perspective, and Jean Pierre Verster, analyst at 361 Asset Management. Lovely to have both of you here.
Thank you.
Graeme, I know over the years you've been quite a fan of Bidvest. I'm just wondering if you still feel that positive about the group. I know it's often been a stock holding in your portfolios. It's been very active. We know the Adcock Ingram story has been in the headlines, but in addition to that, I think 3 other big deals just this year alone. So very active.
Very active, and I think if I could put it this way, not everything you do always works out beautifully. And if you look at Bidvest, for example, Lithotech and the old Tiger Wheel, for example, not everything works. But we have to say, from a corporate finance perspective, they were, and I think still are, the most effective team from an M&A point of view. So you give them, 10 thumbs up from an M&A perspective. But even ourselves, who are still fans of the company, and we think that you're actually going to see value unlocked not through the conglomerate, but through listings of some of the subsidiaries or groups, we have to say, where it was just green lights all the way, the Adcock deal has got us a little bit concerned, and we're saying, something has changed here for a variety of reasons, which I'm sure we'll get into more detail. But it felt different, where previously they went in from a position of strength, normally took things out when there was trouble, and you could see where it fitted into the group. Adcock, frankly, didn't tick any of those boxes.
Before we get into that, Jean Pierre, just more the principle of that. We speak about shrewd deal makers, really a good M&A track record. How do we define that? What's good about that? Making the right acquisitions at the right price?
Yes, that is the first step in that process, but ultimately we as shareholders want to see compounding of value per share, and they have done that, whether they pay cash or sometimes with scrip. Every time, if you look at the compound annual growth rate of profits per share, Bidvest has delivered significantly above inflation, better than their competitors. So even with a misstep here and there, you can say they are shrewd deal makers, and the share price shows that.
Some of the other deals, before we get to Adcock, a deal in Italy, DAC, a deal in the UK, PCL, all these acronyms, and then another in Brazil. Is it too early to say, Graeme, if these could be successful? Is there a theme there? Are you comfortable with those, that it fits in with what they've done in the past?
Yeah, I think there's obviously a big drive to internationalize. I think food services are seen very much as almost a big thrust for them. I think Italy, although Brian Joffe, I think, had less than flattering things to say about France originally, and I would argue maybe Italy's not too different. I think the DAC is actually quite a good acquisition, not just because of the fact that it's it operates throughout Italy and has got turnovers of 2 billion rand. What we like about it is the fact that, again, it's vertically integrating. So he's saying they can source product for elsewhere in the world, for food services in South Africa. So that's really, I think, been the real sweet spot for Bidvest. It wasn't just a corporate finance deal. You buy something and you nurse it a little bit. When they bought McCarthy's, they vertically integrated. They got the group to buy their vehicles through McCarthy's, and that's where the real value was created. Yes. So through not just good M&A, but actually bedding those things down and making those deals really work.
Jean Pierre, so where's the vertical integration with Adcock?
Yes, that's a good question, and that's what investors have been asking as well. So we know that Adcock Ingram is a distributor of product. In that sense, you can integrate it with other distribution businesses, but they've also got a manufacturing component of pharmaceuticals, and that part is not really very easy to integrate with other pieces of Bidvest. It would have integrated to a great extent with CFR Pharmaceuticals, but unfortunately Bidvest came and spoiled that party. So now they need to look probably for other multinationals, other pharma companies to do a deal to bring some of that production to South Africa, to bring the capacity utilization of the Adcock factories significantly higher than where they are now.
And of course the concerns are even bigger. We saw in the results this week that there's a 1 billion rand write-down in the Adcock business. Let's see what Brian Joffe, CEO of Bidvest, had to say about the Adcock transaction in those lights.
Well, look, I mean, I can't justify it as being a good deal. So we have to start from the premise that we didn't do a particularly good deal. But there are reasons. I mean, the big disappointment was that we made a decision based on what we thought was good information, turned out not to be as good as we anticipated.
How bad was that information?
Well, everybody may have a different view as to what the quantum of that is. I mean, you've seen what the Adcock results look like, so I mean that's an indicator of how badly or how badly they've done.
So Graeme, Brian Joffe saying it wasn't a good deal, the information wasn't good enough. What do you make of that, and what's the outcome? How does one manage oneself out of such a situation?
You've got to make the best of it. So effectively, they've got control of it. Let's be honest. They've got three board members. They've changed the CEO. Brian Joffe is the chairman. So they will have a very powerful effect and have the ability to turn it around. I'm not entirely sure that they do see it as such a bum acquisition. I think there might be thinking behind the scenes, frankly, that we're not seeing now. But going through the Adcock results, you also have to say, while the kitchen sink and everything is being thrown into it, there are concerning things. If you look at OTC, for example, you look at the pharma business, it was really just the rest of Africa and India that sort of kept it going. So even if they took a 950 million rand impairment, even if you ignore that, the actual operational result was pretty lousy. So I think what they now need to do is exactly as Jean Pierre said, go back to somebody like CFR and say, bring new products in, bring new capacity in. But it's probably going to take quite a long time. And I think both Kevin Wakeford and Brian Joffe have said, look, it's going to take time for this thing to really turn around. And I think the important thing is just we forgive mistakes. If you're not trying, if you're not out there and you're not looking for deals, you're going backwards. So we accept that. I think it's just because it was such a big deal, and because they were so absolutely determined to get it and paid pretty much over the top for it. That's the real concern. So I think there's just a lot of work to be done, and it's going to be a slow grind.
Jean Pierre, so they certainly are trying. If you look at the rest of the Bidvest story. Thinking about access to capital, boosting the balance sheet, and one way of doing that is to to get access to capital outside of South Africa, and hence the talk of the listing of this food service business in the UK. Is this a positive move?
It is a positive move, and I think it sets them up for bigger things. Brian Joffe has indicated they have their sights on a possible acquisition in the US. We must remember he's friends with Natie Kirsch, who owns the majority of Jetro Holdings. It would be a great acquisition for them. It's quite a big company, so all these little tuck-in acquisitions they're doing has bolstered up the international food services business to be of a significant enough size that if they want to do a meaningful acquisition in the US, they can still hopefully contain control from a shareholder perspective. So I think a lot of investors see the London listing as one step and a few more steps to come.
I'm not the first to ask you this, Jean Pierre, but many South African companies who've gone to the US have come back with their tails between their legs. It's been tough. It's a different market. It's big. It's hugely competitive. But if you look at the Bidvest story, just the regional footprint, they seem to be everywhere, although interestingly enough, not much on the African continent. What to you are the risks of them going deeper and moving into the US?
Well, with any new geography, there are operational risks because you don't know the situation as well as your home country. But they've entered Australia successfully, New Zealand, mainland China, other areas of Asia, South America, Eastern Europe, Western Europe, the UK. So I would back them to do the same in the US.
Graeme?
I would agree, and I think if you think about it, there's a much bigger consumer population. So if you can run food services business and logistics businesses and McCarthy's successfully in South Africa with a fairly small target market, I would imagine that they can do it. And again, it's not just corporate finance. They'll go in there, they'll look at the cost base, they'll look at the structure, they'll look at the products. So I would also back them to do sensible deals if they do something big in America.
Okay, then Graeme, the obvious question to me is why such a limited presence in Africa? So we've got South Africa, we've got Namibia, right? So is it that the Bidvest team are nervous of emerging markets or unfamiliar markets and more comfortable with the developed markets situation?
It's almost what I was saying now. If you think about, Waltons, for example, what is the appetite for Waltons offering into Africa? Or if you look at food services, you just haven't got the market. So places like South Africa, arguably Nigeria, there are more ready markets for the Bidvest services. But that's why I think so much of the growth has been into Europe, into Australia, and now into the Middle East, because you just get the feeling that there's enough business for them to actually go and compete.
Just on that point, we do have a clip of Brian Joffe talking about that listing of the UK business in London. Let's see what he said.
What we see is a continued growth of our food service business. I think very good equity markets abroad, still low interest rates, a lot of opportunity potentially for us to expand, and we obviously need the capital to do that. Complicated doing that out of South Africa now, a devalued rand, higher interest rates now and probably still to get higher. So I think there's a motivation to do that. I mean, we're not looking to divest out of the business. I mean, we're just looking to create some kind of a mechanism for us to be able to improve potentially on the capital availability.
Graeme, looking back at the previous deals, you referred to McCarthy. So what would you say were the blockbuster deals done by the Bidvest team over the years, over the last 2 decades?
There are lots. If you go back to originally Chipkins, I think, take McCarthy's for example. I think they paid just under R1 billion for it in 2004. In the last 2 financial years, they made almost 1.3 billion rand profit out of that. So there are lots. I mean, some of the others like Rennie's, FX, which would have become the let's say the engine or the building block of Bidvest Bank. A lot of capital has been put into it, but there are just so many. Almost every one of them, barring those couple of exceptions we've mentioned. Steiner, for example, has done very, very well for them over the years. So there were lots, and what's amazing is quite a few of those smaller transactions in the early days. Then with bolt-on acquisitions have turned into massive operations. I mean, I think the smallest silo, if you want to call it that, makes 300 million rand profit almost. So they really have been very, very effective. And even something like Walton's, which I don't know if you remember the days when there were chains around the door, and how much they're making out of office now. So the history is just incredible. And I always challenge people, go and have a look on the Bidvest website and have a look at the transaction history. And not even all of them are there. They've only really got the bigger ones. So really they have been very, very successful. And generally I think what they've done, and maybe Adcock is that, find they say we want to be in this industry, we're going to go and focus on it and start it and then slowly capitalize and find the bolt-on acquisitions.
Jean Pierre, very briefly, just closing, are you comfortable holding Bidvest? Deal making drives their performance.
Correct. I think a lot of people might think that when Brian Joffe ultimately retires, things might change. I think the separate listing of food services business in London addresses that, so we are still comfortable with Bidvest.
Thank you very much, Jean Pierre. Graeme, that's it for this week's Deal Flow. Thanks to my guests, Graeme Korner and Jean Pierre Verster, for joining us. From me, Erica van der Merwe and the Deal Flow team, it's goodbye for now.